Hey guys, hope you guys are having a great day today. I am feeling much better and more energetic, much in due to the vast support and love you guys have given me these past couple of days. Today, both of your stocks finished the week strong. In a show of defiance, both stocks finished above the targeted price. Hedge funds seemed intended on dipping us below. We have an ironic set of developments with that we need to discuss. These topics range from a variety of important market members. Some of this stuff was uncovered earlier in the week, but I didn't discuss it, so I will do so here today. Before we begin, let me make the disclosure that I am not a financial analyst or advisor, and that all contents discussed in this video are provided as opinions. All efforts are placed to better understand the nature of the current market in anticipation of the greatest squeeze in financial history. Everything presented is evidence I collect, and all opinions are based on research, experience and knowledge on the matter. I want to thank all my one-time donors and my Patreons, whose contributions continue to pave the way forward. Thank you all for the love and kindness you show this channel. If you find today's content to be informative and helpful, I ask that you consider dropping a like, as it will help the video reach more people. With that out of the way, let's get straight into the matter at hand. Today we found out that Citadel has been requesting the SEC to make exemptions from initial margin requirements. It is so funny that they got caught requesting this type of stuff when just yesterday we talked about the fact that margin requirements were increased. It seems the SEC did not care to appeal to the petty plea by Citadel. This is the same company that a couple days ago was found to have been requesting payment for order flow to be banned in 2004. That's right. Let's talk about this, because I find this to be one of the most telling characteristics of this hedge fund. In 2004, Citadel Group urged the Commission to ban payment for order flow, citing the practice distorts order routing decisions, that it is anti-competitive and creates an obvious and substantial conflict of interest between broker-dealers and their customers. To make things even better, Citadel explains that payment for order flow has a strong incentive to route orders based on the amount of order flow payments, which they say benefits broker-dealers rather than the basis of execution quality, which is what actually benefits customers. To see Citadel admit to all the things and concerns that we have accused payment for order flow to have really drove home some points to me. First, it goes to show that we are indeed right, and that Citadel understood once upon a time long ago that this system does not favor retail or clients in general. It only benefits broker-dealers in the end, and takes away the intended value that it should have on the market. It is funny to see that Citadel was once, as this document shows, a rather well-intentioned company. They seemed to want a fair market that provided benefits and value in a fair manner, which pales in comparison to what it is now. With the NSCC raising margin requirements a full 25%, after Citadel had asked them back on May of this year to keep them down low, is a great feeling. I like the idea of a world where institutions do not bow down to the capricious demands of a company that is so hellbent on destroying the markets that make the world run. Somebody sent me a DTCC website link with some pretty bullish statements that I found I needed to share with you guys. DTCC Executive Director Bob Stewart discussed the impact of Phase 5 of uncleared margin ruled for over-the-counter derivatives. We made a pretty big video talking about derivatives not too long ago, and much of the statement we are about to go over helps validate what we talked about is true. Bob states that he expects an upsurge in the volume of margin calls and an increase in the need for third-party custodians to safekeep collateral. As a result, uncleared margin rules will likely require many buy-side firms to make significant changes to their existing collateral management processes. Now, I know this statement is very wrinkly, so let me smooth it out for you. What Bob Stewart is doing is warning us that he believes that margin calls will start increasing around September. Now, do not get all cute thinking this means Lambos will be delivered by December. Remember that a margin call is not the end of the world and quite frequent. Hedge funds have the funds to cover the increase in margin calls. What is of value in this statement is that in conjunction with some other stuff happening around the markets and overall economy, stress levels are not looking good, and this could potentially result in more price volatility. Again, I saw a lot of people already start posting deadlines on the squeeze, which I think is the dumbest thing we can do, as we cannot anticipate half the variables at play and how different gears will respond to each other. What I do know is that, based on this statement and some of the evidence and sources he uses to drive this point, we could realistically see hedge funds getting margin called more frequently, as well as a bit more price volatility. It is Friday, and I do not want to overload you guys with content. I got a serious and beefy video coming to you this weekend on Sunday, so stay tuned for that. It will be a bit long, but will have plenty of wrinkle-adding substance to it that should make it worth it. Let's quickly cover some of the updated data that showed what took place throughout the day. The Fed reported that reverse repo operations for today resulted in over $1.05 trillion. It is crazy to think that we have been averaging over $1 trillion worth of reverse repo operations. AMC's dark pool transactions accounted for 67% of the total volume, while GameStop dark pool transactions accounted for 47% of the total volume today. According to Fidelity data, buy order flow for AMC were bigger than the sell order flow, with GameStop's buy order flow being over 3 times as big as the sell order flow. Now, let us finish up with a recap today's performance. AMC stock had a pretty good recovery today, closing the day over 1% in gains. The stock traded sideways for the most part during the pre-market. The stock opened to surge a bit to $33, which it tested twice without breaking the resistance wall. As such, the stock fell back down again and broke the support wall. Reaching and testing $32 twice, the stock all of a sudden started moving upwards again, eventually breaking the resistance wall that it had formed at 33 and moving all the way to 34.48. A really weird sell-off immediately occurred, dragging the stock back repeatedly all the way to a closing price of 33.47, which was slightly above the VWAP. AMC performance today was in many ways very similar to yesterday's performance. The stock had the same surge in the morning followed by a dip before running upwards for most of the day. I really liked how AMC behaved, and having ended above $30 was a serious victory against hedge funds. I can sense a bit of the frantic panic they must have had when the stock consolidated so high and seemed like it was about to have another little breakout upwards of $35 as it seemed poised to do. This is why I think we experienced that weird dip you see with a question mark. It shows to me that they did not want to risk having it go that far and implemented some kind of manipulation to vertically hit us with that crushing dip. Either way, today is a day to celebrate if you are an AMC shareholder. GameStop ended the day with a relatively insignificant gain of 0.10% over yesterday. The stock was hit hard today, no question about it. The stock opened to face a serious dip that took it down to 157.50. Shortly after, the stock bounced back up and continued making up ground, reaching 163.50 eventually, reaching the upper band of VWAP. The stock then experienced a pullback which drove it down to 161.25. The stock quickly bounced back, seemingly intending to retest that high once again. It was then that the stock was victim to another short attack that defeated the stock back down to 160.12. GME once again had a strong run-up closing at 162.52, above the VWAP. Investors today enjoyed the victory of ending above 160, ending many options in the money. It was clear that hedge funds tried to force us down to 158 and maybe lower, but I saw many people come in and buy tons of stock, taking advantage of the price. Let today's victory carry you into the weekend, and relax and fill your mind with joy and fun moments. We come back on Monday strong again, though I will be posting videos on the weekend. Life is short and it is precious. Do something fun, live to the fullest and be the best you can be. With that, let me know how you feel about the video. Thank you all for your understanding, for your love and care. I shall see you sometime this weekend on another video. Big shout out to all the Patreons and one-time donators, whose contributions have carried this channel and everyone who watches it. Links will be in the description if you want to become an active member and help support this channel. Remember to follow me on Twitter if you haven't already, and I hope to see you guys on the next one. To the moon.